Folks, the bond market and the dollar are acting very strange. In fact, in the United States economy, one of the things we have to pay attention to and see if it continues is the US economy starting to trade like an emerging market. For the longest time, the United States has been the gold standard for safe investing. And over the last week or so, we have seen that break down. This is important to watch. It might just be a short-term blip. However, if this continues, it cannot be seen as a good thing, and there will be some ramifications. So what am I talking about? Historically speaking, when rates go up, now I am talking about the 10-year note in this example. You can think of the 30-year note as well. When rates go up, right, the dollar gets stronger. That's what's supposed to happen. If you are the gold standard as an investing market, you are supposed to accumulate more said investments as your rates go up. Now, of course, if rates go down, the dollar is supposed to weaken. This standard has run for 50, 60, 70 years, and it is starting to break down. Last week, we saw rates go up. In fact, we saw rates move in the 10-year and 30-year note. That hasn't happened since the 80s. It's by some charts, 1987, by other charts, 1982. Regardless, this is unusual. We saw rates move violently up. However, the dollar weakened. This is what's supposed to happen in Argentina or Colombia or a Southeast Asian country. This is not supposed to happen with the US and the US dollar. Now, again, this could have been a short-term blip as people reposition their trades and liquidity based on the tariffs. However, I think more and more investors are frankly going to grow concerned with the United States. I suspect an exodus from the treasuries and dollar-based assets. And this could be the start of some de-dollarization. Again, if you step back for a minute and remove our US bias, it probably makes sense. It probably makes sense for countries to diversify and maybe not be so dependent on the United States. Again, when you think about the dollar reserve currency, I don't see that changing, but I would imagine plenty of investment houses, countries will have less dollar-based assets a year from now. Now, is it 2% less? Probably not a problem. Is it 20% less? Problem. So again, folks, we have to understand that there are going to be some significant ramifications, some significant adjustments. But again, I would ask you to pay attention to the fact that rates went up and the dollar weakened. That is not what is supposed to happen to the gold standard of investing, which was the US dollar and US-based assets. So it's time to pay attention. Again, it could reverse next week, but we will look into that more. We did get some earnings on Friday. Again, we don't record on Friday and Saturday, but wanted to give you these. Morgan Stanley, Wells Fargo. Morgan Stanley beat top line, bottom line. Wells Fargo missed on revenue, so they missed on top line, beat on earnings. I did see Frontier Airlines cut flights as demand falls. Again, one of the unintended consequences of this drastic tariff change is we are starting to see international consumers not necessarily boycott the United States, but it is clear if you look at some of the charts that entries from foreign countries, Europe, Canada, and others are down and down significantly. It'll be interesting to see what United Airlines has to say. I think they report on Wednesday. But we are seeing some implications very quickly. And again, I think what we're going to start to see next week is a lot of businesses pull guidance, which is not something that you want to see. We did get PPI on Friday. Again, it was a great number, but frankly doesn't matter. PPI came in at 2.7 for the headline. Core came in at 3.4. All of these economic numbers, frankly, most of the economic numbers, if not all the economic numbers we get in the next 3 weeks, are frankly going to be useless. They're all going to be data pre-Liberation Day. Hence, they mean nothing. It's going to be the economic reports that start in 4 weeks that will start to give us insight into what is going on. Fed Kashkari called out what we opened with, said that the rising 10-year and falling dollar shows that investors are moving on from the U.S. The next line is important and should send a little bit of shivers down your spine. It says, Fed Kashkari said, U.S. not safest place to invest. Think about that. Because we have been the gold standard for the place to invest. And if we start to see even a small movement from U.S.-based assets, that will be problematic. This is going to be something that we have to watch going forward. Folks, don't forget, if you are a part of school, I will be going live inside school in 23 minutes, 8 a.m. If you want to join that, you're not part of school, you can still buy it. You can go to school.com. That's school with a K. Join one rental at a time, and I will see you in there. We go for an hour and talk about anything you want. Consumer sentiment was probably the biggest number of the day on Friday, and frankly, it too means nothing, but should be something we pay attention to. So consumer sentiment dropped, crashed, collapsed from 57 to 50.8. It was expected to go to 53.8. Why is this a problem? Well, the simple answer is, do you think any consumers feel better after last week? If consumers were already this down before Liberation Day, what the heck is the next consumer sentiment going to say? It's going to be in the 40s, and that is not going to be good. In addition, inside consumer sentiment has something that keeps the Fed on pause, Yes, the Fed on pause. Inflation expectations surge yet again. Again, remember, this is during tariff talk. We now actually have tariffs. So what do you think inflation expectations are going to be next time? And again, inflation expectations surged to the highest since 1981. Folks, if you don't know what was going on in 1981, do yourself a favor and search that. This was Arthur Burns, Paul Volcker yanking rates higher. Obviously, Paul Volcker yanking rates higher with inflation expectations surging. We now have a 12-month expectation of 6.7%. That is not good. Expectations for inflation is 6.7%. That is not good. That changes consumer behavior. Last month, it was 5%. So again, a significant move. Not to be outdone, the 5-year inflation expectation is 4.4%. And in case you're wondering, 4.4% is nothing close to the Fed's goal of 2%. Last month, it was 4.1. So again, up. Not good. A lot of people are talking about the Fed having to cut in May. It's not going to happen. The Fed has seen nothing yet in the data, right? Data dependent, that says the economy is crashing. They are seeing data that inflation expectations are getting worse. This is not good. GM is cutting jobs and idling a Canadian plant that produces electric vans. And they canceled or cutting jobs due to market demand. So again, cars are getting, I believe, a 25% tariff on foreign production. So definitely impacted. Nancy Lazar, chief economist at Piper Sandler, says, and I quote, "Forget about housing in this rate environment." Yes, folks, I heard from lots of agents talking about what's going on in real estate. Plenty of cancellations from buyers who did not have a rate lock. Maybe they were waiting for docs or inspections, and rates went up now over 7%, over 7% again. Again, I think we're clearly learning anything below 6.5 good, over 7% bad, and we are clearly over 7%. Again, Nancy Lazar, forget about housing in this rate environment. I will add to that, because we are on one rental at a time. That should be good news. Good news for all of us. Why? Because we look at the numbers. We don't care about the cost of capital. We write deals that cash flow day one. Oftentimes in this environment, they're disrespectful. But heck, we are only looking for one motivated seller, and higher rates makes the process of finding motivated sellers easier. Folks, I see 143 of you out there watching this live. I just want to recognize you. I want to thank you for being with me each and every morning at 7:30 a.m. That's when I do these live. So if you want to join me, great. I would ask that you help me get to 70,000 subs. We are slowly marching towards 70,000. If you can hit that subscribe button as a thank you for putting all this data together. It's 2.5, 3 hours of reading to put on this show each and every morning. So if you could do me a favor, hit that subscribe button, I would appreciate it. Larry Fink, speaking the truth. U.S. has a big image issue right now. U.S. brands are being discriminated against. This is very, very important to watch. We heard earlier in this show talking about travel to the U.S. from foreign countries collapsing, some countries down over 30%. If we start to see people boycott, for example, Nike or Starbucks or other U.S. brands, that will be a problem. If you're on the East Coast, you've been asking for quite some time now to come out to the East Coast and present. If you follow me on Twitter or IG, you know that I've been invited to speak at an Orlando event. Yes, Florida. Olivia and I will be out in Florida in early September speaking at an amazing event. I'll try to put the link below so you can check that out. We will get earnings season starting next week. What will I be looking for? Again, folks, just like all the economic reports, the earnings from what will be Q1 are irrelevant, not important, doesn't matter. I will be looking for who and how many pull guidance. Basically, pulling guidance says it's too hard. I don't want to give guidance. How many folks are lowering expectations explicitly? And then finally, are any U.S.-based companies seeing demand collapse in foreign countries? These are important things to talk about. It should be noted that Trump adjusted tariffs on smartphones, computers, and other electronics. So it seems like more and more exceptions are coming. That is interesting. We did get one new school member. I hope there's a lot more new school members today. Flavio, thank you for joining. Don't forget to introduce yourself. Get to level 2, level 3, unlock all of that, education. Join the accountability groups. Ask questions. Just be part of the 350 amazing people. I guess we'll close on this. JP Morgan upped its credit losses. Weakening economy, credit losses, think write-offs, up their credit losses to $3.3 billion. $3.3 billion. They had $2.3 billion in write-offs in the previous quarter. So they increased their reserves by just about $1 billion. That, again, is a bank getting ready for pain. And then finally, what did Jamie Dimon say? Jamie Dimon said something that I frankly agree with. Doesn't care about the economy over the next 2 quarters. We have had recessions before. Again, what is he saying there? He's basically saying the next 2 quarters are going to be full of chop, full of uncertainty, full of people like you and I, investors, business owners, pulling back. I don't know how you could be a small business owner in this environment and really make any large investments. The rules keep changing. If you are a small business in the United States and you rely on Chinese goods to sell in your market or your shop, It ain't happening. There's going to be a lot of there could be a lot of store closures, at least in the short term. This is going to have an impact. Let me just look at my notes one more time, see if there's anything. Oh, well, let's give Joseph Wang. Joseph Wang's been on the channel plenty of times, so let's give him some love. He said, and I quote, Asian investors are selling dollar assets and buying gold. What has been going up the last several weeks, if not months? Gold. Why is that happening? People are diversifying out of US dollars into gold. This is important. As I started the show, we have to watch this trend. If rates continue to rise and the dollar continues to weaken, we have a structural problem. When the gold standard of investing breaks trend, you have to pay attention. Folks, never forget that 2025 is the year of real estate investors. We are going to see record low transactions. We are going to be the solution for plenty of home sellers. Go learn creative financing. Learn about the 90% CLTV, combined loan to value, with the first and the second. Understand what a disrespectful offer is. Understand how to calculate yield. If you need help with this, join school. Don't do it alone. School is 67 pennies a day. If you are going to be a serious investor and you can't afford 67 pennies a day, you should just build your emergency reserve. But if you're ready to do the work, if you're ready to get in the community that can help you, join school. And frankly, I will be going live in 12 minutes. I hope to see you there. Later. Talk to you tomorrow.